And let's go ahead and talk about order blocks. A lot of you have been asking for this specific lesson. I know I talk a lot about order blocks. A lot of you have seen me execute off of order blocks quite often. So the time has come, finally introducing one of my favorite PD arrays, aside from the fair value gap. So what is an order block? Well, an order block is a type of change in the state of delivery, where price engulfs the previous candle, typically after sweeping liquidity or a PD array. So, in a bullish context, that is the last down close candle or series of down close candles before a bullish change in the state of delivery. This is literally the exact same thing we just went through in the market structure continued lesson, except now we're actually putting a label and a name to the previous down close candle and a previous up close candle. So, in a bullish order block, you want to see price sweep a liquidity level, give a change in the state and delivery. The candle it leaves behind on the downside is the order block, and it's a bonus if it leaves a fair value gap. That just makes it even more high probability. Now, a bearish order block, on the other hand, is the last up close candle or series of up close candles before a bearish change in the state of delivery there. You can see that candle engulfs the other candle. We have a fair value gap as well. That is not required, but it does add an extra bonus. And as with all confirmations, it must close past it, just not wick past that. So it has to be a true change in the state. And also, bonus points if it has a fair value gap, like I just said, adds a little bit of extra confluence. Order block mean threshold. And after that, we're going to hop on the charts. This is the same exact thing as the fair value gap consequent encroachment, or the same exact way of measuring it with our Fibonacci tool. So you simply have the high of the order block, low of the order block candle, 50% point is the order block mean threshold. So between the open and closing price of that order block candle. And exact opposite on the bearish side. When price respects this level, it's a key indication that the order block will hold, just like the fair value gap. And if it starts closing past that mean threshold, you know a reversal might be coming when it starts respecting that level. Now let's go ahead and hop on the charts. We're going to go over several examples of order blocks, starting with this one from today. This is actively happening actually right now. So you can see here, we had a displacement leg. And then we did sweep some higher time frame liquidity, and then we had a bearish change in the state. So you can see right there, down close candle, and this bullish candle engulfed it. So that is an order block. Now the way I actually map out my order blocks is I will take the Fibonacci tool, take the high to the low. The top of the order block I'll mark as my order block level. And then the 50% point right there, the equilibrium, I mark as my mean threshold. And the way I'll label that, I'll just double click here. For this one, I'll put OBMT. And then for this one right here, I'll just put OB. And it should be pretty self-explanatory what the OB stands for. So now that we have these, you can see price comes down. We actually trade into those and we end up respecting them. So you can see how well we respect that on close, even though we did quite a bit of wicking past it. You can see how well that level gets respected on close. So all throughout there, you could have been taking entries throughout this point. And as long as you kept your stop below the order block candle low, you would have been perfectly fine, which is good practice. So, beautiful. We had an order block there. And what else do we do? Just like fair value gaps, you can use order blocks as targets. So, we actually had a bearish order block up here. So, what do we have? We had delivery from a bearish or bullish order block to a bearish order block right here. And in this case, we closed past it. And you can see here, guys, it respects mean threshold here, goes bullish, does not respect mean threshold there. It closes quite a bit past it. You see right after that, price just continues to run. So that's how you can also tell if a certain level will get respected or not. As soon as you see that close past mean threshold, probabilities of it going down from there are very much lowered. Now let's go ahead and drop down to the 1 minute time frame here, just so we can see some closer details of this exact trade. And you can see right here It's very subtle, but we actually also have a 1 minute order block because we came down in that 15, wicked, boom, displaced. Behind that displacement, we left this down closed candle. That is a bullish order block. And that's on the 1 minute time frame. You can see we have that order block there. It comes in, it barely taps it, but you definitely would have been filled on that order block below the candle low of that. And you can see that brings a risk to reward ratio up even more, even if you only got the bottom of that target. So beautiful, beautiful trade right there. You can see classic example of an order block. Let's go ahead and find a couple more of them here. And I think we actually had a good one this morning as well. You can see right here, technically at an order block. I ended up passing on this one because it did give a big rejection wick, but you can see the concepts still play out. So we still delivered from that mean threshold right there, as well as respected the bottom of the order block. So it's a bearish order block right there. See if we can find one more example of an order block here, guys. And let's see, this is also a good example. So if you remember, we did the fair value gap last time on this one. Now we'll use the order block. And what did they say about order blocks with fair value gaps by them, guys? Higher probability. So you can see right there, we tap into it. So you could have taken a long at that gap right there, stop below here. And then you can see right after we tap that order block, we end up pricing all the way up to there. There was another order block there that you could have targeted as well for a nice 1 to 3.7. So you're starting to see how this works. Order blocks, fair value gaps, all of these in combination. You're starting to see how everything connects together into one picture. Now, the next technical lesson I have for you is going to be incredibly eye-opening, and it's just going to add even more understanding to what you're already learning right here. So it's already happening here. It happened just now. I am going to point it out to you in a future lesson so you can get even more confident in these type of trades. So appreciate you guys being here for the order block lesson. Comment day 16 complete down below and share your biggest lesson, biggest epiphany from this bootcamp episode. Other than that, I will see you in the next one. Take care, everybody. Be blessed and have a great night.